Hello and welcome to the nighttime video. And it's not a normal thing. I just thought, yeah, let's get the microphone out, make a video, and talk about cryptos like I normally do. All bets, trades, and of the like within one's own risk reward. I'm also going to talk about mathematics upon the buy low, sell high strategy when all your coins are worth the same amount of base currency, usually Bitcoin. And I'll talk about that after going through some of these charts. Within Bitcoin, the decline from the pattern of matching lows and lower highs broke right after this session here. And since that point, the status of making its leg lower, keyword making, not future tense, not past tense, but current tense, is the story within its correctionary move, which started on November the 28th. It was unable to even get the 18 average to flatten out, let alone even attempt to revert the trend. Leaving the 18 average, which it has been doing the last couple of days, has just really went sideways since then. I look at this as en route to that of 3,000 as its next station stop, as you might hear in a train station. But we'll see how it goes. If it doesn't, if it has already bottomed or bottoming near this point, it would be a pierce above. Usually, as I've talked about within the key Fibonacci levels from this low, I see pierces extra upon the moves. So I wouldn't be surprised if this thing comes down towards like 27, 28. I've talked about that, of course, for quite some time. I don't want to go over too much. 4-hour time continuously. Just correcting within this 18 average, and on the single hour time frame, going over the failed move, fast move, because I mentioned there's going to be a failed move in either direction. Regardless of the fact, there's no fast move that's going to happen. This thing is basically went range bound. As for a failed move, the what I'm looking for, at least on the breakdown, obviously the polar opposite, which we'll get into after this for the failed breakout. But you have a key level of support that it breaks below. Not a surprise to be able to draw a box like that, which is the case because it doesn't stay down there long and it quickly comes back to where it congested from, which before was around 3,300 and a half. It does so. Quickly thereafter, it gets out above the area, and it did so on 2 occasions. It did so on its first period, and then after it corrected to the 18 highs, it attempted to do so again on the December 7, 1900 timestamp. But it also, after getting out above, shouldn't take too long for it to break out above of the resistance and go higher. So it's been way too many periods now. I'm throwing this failed move, fast move from this play out, as I would be as well from the upside, because same sort of thinking here that you have the breakout that happened right in here, comes back down in here, but it hasn't broken down. As long as the market trades between 3,200 and 35 and a quarter, it's completely neutral amongst this short-term time frame. And I don't care what it does, it's just, to me, going to just chop around. If it breaks out above the 45.25, then I'll be looking at the more longer term time frame, talking about looking, okay, first we got this previous resistance at 37 to 38, possible resistance which was support, and then on the daily term you got previous resistance in at 42, 43. So there's so many different levels it's going to end up having to get by. But on the short term, again, breaking out above this resistance, that's where it'd be going, and breaking down below short term, it's that $3,000 target. Let's go over a few amount of altcoins. Komodo has an interesting day, and what's happened within it, we had the lows here at about 1,300, came up to the 18 average of highs. We can see that it managed to get above it and then come back to it within the session. So within this candle, November 29th, breaking above it, then finding support amongst that level for 2 days, not coming down to the 18 lows, and then having another leg higher, which then corrected through time for 3 days, decent red candle down, but it made that higher low to this area. It did come to the 18 average of lows, and now it has made a move up to the highs. In today's session, it's gotten above it, has now entered back within it, starting to show some strength within such of this pattern on the 4-hour term. Then within such, here's your 18 average low test, getting above it, and now showing a couple period strength amongst it while it's still below the previous December highs, or highs from a few days ago. After all, we're looking at this very short term. There's the large move earlier today. I was able to sell at it was 17.49, and then I bought it back as it came back down immediately. Then I sold again at about 17, pretty much at near this top, 1770-ish. And I'm not going to buy it back until it comes down here. All that type of stuff. And that is it for Komodo. Let's move on to Poly. And upon its daily term, doesn't seem like much is going on. I mean, the pattern, well, what's the story? I can definitely see a lot of that. Had these September lows. Beautiful day on October the 17th. Beautiful because sell orders hit and you buy back, and then further sell orders hit and then you buy back. Sideways movement since then, since it resisted the 18 average of highs on November the 26th. Beautiful support at the lows. Great day here, but I like how it has successfully supported where I'd want to do so. Hasn't broken out above it yet, but when you see a size of this move like any other day being normal, and it's only 1 hour and 20 minutes into the daily term time session, then something has happening fast. And looking at the hour, well, there we have it. Very noticeable sideways move, breaking out above such. 15-minute. Look at how these red and green candles are showing a lot of nice, beautiful volatility. 5 minutes, having a beautiful breakout move, correcting back down to the 18 lows, highs rather, having a leg higher, this time correcting at the 18 lows, but now it's lifted off nicely since then over the last 10-15 minutes. As such, so I see a pattern as I stand right now. If this thing can continue further, and it looks like it might have a decent chance, start to get over 3,600, even get over 3,594-ish, then this thing has the potential to continue the this little pattern of maybe a decent sized green candle that could get above this line, and thus maybe make a play above the 18 average of highs and test the into the some of this some decent higher prices rather. Next up will be Singularity Net, or ticker symbol AGI, and it had a nice little high on the early parts of November. Came down, it went below the 18 average of lows, but that means on, and I can't put the 3-day on, but it found support on those types of ones. Either way, it's made this higher low, has managed to show this nice little 3 days here. Got above for beautiful gains, but has now came back down to this 18 average. So this is a big 18 average test. What I like about this is just the nice little volatility that is presenting itself within this market. So you got moves going from like 1,400 down to 1,000 short term. You know what? That's the type of stuff that I like. Let's move on next to Arion, or Arion. I don't care how it's pronounced, but I like to look at the charts, of course. And you have this move, any of these moves that I need to see it hold, stay above this area, stay and hold within the 18. Well, it's showing a lot of weakness right now within the 18 average of lows as it congests within the area of where it came from, rather than supporting that area. I would have liked to see it hold around the 7,500 mark. So currently down a little bit from that point. Looking at this on the shorter term time frame, an opportunity to break out 7 o'clock or earlier yesterday morning. Didn't do so. It hasn't broken down yet, but definitely concern signs. And this is why I like my strategies. I have no idea how it's going to break out, but I look at this and I realize if this thing breaks out of this resistance to the upside, I mean, there's just phenomenal gains. And if it breaks down to the downside, well, there's going to be phenomenal losses. Either way, I'm happy because of how I align my trading strategy, which, okay, if I see there's going to be decent sized volatility, then have your buy and sell orders ready for decent size. Because if it breaks, if it manages to go higher and holds this current 6,500-ish area, and it breaks out above the 18 average of highs. Even a lower high gets me in at around 9,000-ish or so. That's a differential of over 2,000 points, 30%. Matching high would be close to double. There's a lot of big moves, but if it breaks down, I'm thinking, okay, where do we go to? Well, we got this previous level of resistance. It's already supported, so previous level here, we got 37. That's half off. Even if it's in congestion area or a noticeable leg lower from here, we're looking at 5,000, and that's a differential right now of 2,000 off of 7. That's 28%. That's decent sized legs. So normally with a lot of coins, I'm going to be looking for selling and buying at 15, 16%-ish kind of moves. I can increase it with coins like such. And I want to transition into the math upon orders, buy low, sell high, where coins are worth the same. So therefore, maybe you plan for a Bitcoin, 0.10, 0.01, 0.001, whatever it is. Then that means, and we'll just use the one Bitcoin number for easy math in this example. If you were to be, say, selling for a 20% gain from last trade, then that means that you would sell how much? Well, if you were worth 1 Bitcoin, it would be worth 1.2. So you would sell 0.2 of it, which would be divided by 1.2 of what you own. That's 1/6. So therefore you would be, and let's just assume for numbers how many that you owned. Let's say that you owned 100, and now it goes up to this level, 18%. Let's just say you sold about 18. And then you're selling that for a 20% gain in market, basically. So that would be about a profit of about 3.6, or in this case, you would be getting 3.6 or 3.6%. That's what you'd be making. Now, if you sold for 44%, so you waited for a gain, you're going to get a lot less trades, but you're going to sell 44 out of 144. That works out to 30.5% of what you own, taking this number. And then, if we take 44% of 30.5, you get 13 and 4/9, or 13.4. Now what would happen is if a market goes from 100 and goes up 20% to 120, and then it goes up 20% more, that would be a move to 144, which would be a 44% move. You would get this twice. So if you were trading for 20% moves, you'd make a 7.2% profit. Trading for a 44%, a 13 plus. Playing it out on higher numbers, if you're waiting for markets to double versus a 41% rise, 41% up twice works out to about a double, basically, or 100%. And each time you would sell 41 divided by 1/41 of your portfolio, or 29.1%. Multiplying that by the 41% gain would be, you'd be making 11.9. So when markets do something like this, and I'm saying the gain is in you fill your requirement. You hit a sell order and then it comes back. You hit a sell order and then it comes back and you get your buy. That is where the gain would come in, because if I was to make 11.9 twice, that would be about 44 or about 24%. Yet here, if the market doubles, then I'm going to sell half of what I got for a 100% gain, which is why I multiply it by 1. So I was worth 100, it goes to 200. So of the 100 that I sell, I would basically get your buyback at 50 or whatever. There's your 50%. And it works out that when you're playing shorter term trades, you gotta get a bunch more just to overperform playing on the long term spectrum. So if you were to only go to the computer once a day or even twice a day or 5 times a weekish to check trades, then I would highly recommend that you wait for very decent gains. Of course, each market depends on what percentage should be played. I do like playing for smaller percentage gains, even the 15, 12, and in some cases 7, 8% moves. But as I look at it, as I determine big volatility can come into play, then I can make amends for such. But not only that, it looks as if playing for long term is better. One advantage for short term is the following. It's mathematically, yeah, okay, it's a disadvantage when you look at it. But you're going to have many situations where things are going to work out beautifully as it is anyway. As an example might be, you have like a sell order. I talk about like having a sell order. So using just even not throwing out these large ones. If say you're playing for 10% moves rather than 30% or 40%, then what's going to happen is you got a market at 1,000 Satoshi, you put a sell order in for 1,100. Now your next sell order, maybe you put in for 1,250. Maybe you put another one in for 1,600, then 2,400, where the percentages rise a lot higher. And when those plays hit, that's going to do very well within your portfolio. I've looked at my portfolio in general. I have about as many Bitcoin value. My whole crypto portfolio is worth about the same amount in Bitcoin today as it was about early December last year or before the Litecoin rally started. And I look at what's happened since then. I have distributed a decent amount of it in different ways for, well, uses of real money, just selling it to different people. I've used it to buy precious metals. And I've used it to buy altcoins which have went down. So my altcoin portfolio year over year, obviously from December last year into January, went up. And to now, it's right here, back to where it was. A lot of it is because of my strategy. And within this buy low, sell high strategy, you're going to have down moves where this is exactly what your portfolio is going to do. But from a lot of the stuff and the mathematics and examples I have shown on here, it is designed so that when that time is over, the upswing that will come in will be so magnificent so that when it happens again, and that's not the down move I want or slope I wanted to show, but when it happens again, it does it again at a nice lower volatile rate. So really that's the plan for me. I'm going to just keep on playing the game of waiting for coins to come in, because even short term, let me just show DGB. And we see the moves going up and down like this. Decent sized volatility overall. But even when I look at this even short term, I was thankful to be able to literally buy down here, sell up here, and I have now since bought down here. Or did I? Where did... Let me just get the exact numbers, because I did just recently buy. And maybe because I'm looking at the 50-minute time frame, that's the reason why. But I last sold at 307, which was at, or that's as high. And I've had 2 buys ever since. And I bought down here, sold up here, bought down again up here, and then bought at this low again. I'll be looking to sell probably, I think, up here. But all these short-term moves I'm going to be looking to do, and I realize, yeah, short-term doesn't do as well. If I can get more trades in throughout the day, then I can maybe get a bit better. But I've also realized, yeah, there's going to be situations where I'm going to be able to realize, man, I can get a big, I'm looking for a big sell-off or a big rise here, and then adjust my orders accordingly. And then when the big moves happen, and then the biggest one is when it just goes up straight up. Because then you know your buy orders can be a lot lower in percentage moves than they normally would be. And the more aggressive, the more higher your percentage gains and your percentage losses are on the plays, the better the profit overall is going to be. It sounds basic, and it's so true, but you're going to do better selling what you want, say, at 300 than you do at 290, as long as the trade gets in. And same thing, if you're going to buy back at 250, you get a better deal if you buy back at 240. So understand the best you can that, okay, where's a more realistic level mathematically? Is this going to be a realistic play? And then execute accordingly. Thank you for tuning in, and have yourself a great day. Bye-bye.